Hi, Warriors. See what's on my shirt? It's hope. So let's be hopeful about our trading and not include hope in our trading plan. Who's with me? Hi, Sinatra. How are you? AJ? Who has hope? If not, make some changes and you'll have it again. Hi, James. Bran. Bonjour. Hi, Blake. Ryan. Patrick. Nuno. Marcus. Hope is not a trading strategy. Okay. Team Hope. Okay. We like to give people hope because, a lot of people are hopeless after doing this for a while. Who's ever felt hopeless? Like, I give
Oh
up.
my God.
I give up. Huh? You ever hear? That's enough for me.
Yeah.
I need a break.
I can't do this. I can't do this anymore.
Yeah. Yeah.
Yeah.
So, make changes, maybe even just step away for a week and think about things and have a plan to go back in.
Dale, one of the things that always helps me, I mean, especially I've been doing this, I've been trading now for over
You're
25 years,
you're a
going on 30.
dinosaur, man. You're a
Yeah, I
dinosaur.
know, but you've been doing this long enough. Like I know what works for me.
Yeah.
And usually when I get to that point that you're talking about, it's because I'm like kind of like cowboying it around. I start breaking the rules. I'm overconfident
Yeah.
and then I start making mistakes. So I always know for me, I can just go back to the basics. Like I know what works for me. I know like systematically, if I do this, and this, for me, it tends to work out, a majority of the time. And so,
Enough. Yeah.
yeah, enough to
Yeah.
rebuild my confidence. So that's kind of what I do. Just a good
Yeah.
suggestion, or just a suggestion for any new traders that feel that way. So
Yeah. And I guarantee, Blake, that you've been with people that are in chat for, all the way back to Wide Straight days. And I'll bet that they have made you better. They're still with you, plus all the new people in the last 8 years
oh
that have
yeah,
come into the community. And then adding Ryan and K-Man, there's a new avenue of
they they've been a
analysis.
godsend.
Yeah.
Yeah.
So I mean, um,
But our traders in our chat room know when I'm having a bad day. I will tell everybody,
yeah,
like yesterday, was it yesterday? I closed out all of my dollar longs
yeah,
yesterday for
yeah,
losses. And
yeah,
it wasn't a good day. On top of that, I wasn't feeling very well too. So that just made it worse. But I'll sit back and tell people like, hey, I'm not trading really well right now, so I need to get back
yeah,
on track. And we have those conversations, and it's nice to be able to have that outlet. And you can try to go do it on social media, and you're going to get trolled. But in our chat
yeah,
room and our community, we really support each other. So make sure you take advantage of those discount prices this week.
yeah.
Anyway, sorry, that was
Yeah,
my
yeah.
pitch, and I'm
So
not feeling well. So
save your voice, and let
yep.
me go to Ryan here. Hi, buddy. How are
Hey,
you?
mate. I'm good, mate. You?
All right, good. So I read that China tweaked things again last night with rates, and I'm looking at this, and it kind of looks like the end did at the low. Trying to put in a key. It was counterintuitive for the yuan to strengthen when it eased, right? So could this be a
Yeah,
turning point here in USD? I know you trade it.
yeah.
Are you considering it here?
Well, I'm already long.
Oh,
For a
okay.
bit,
Well, that's
bit above.
then you have considered it.
Yeah, I'm not. Yeah, I've definitely considered it. I'm not happy with the trade at the moment because I thought if they did throw the kitchen sink at things, we'd
Yeah,
see it weaken. But the market's taken it the other way. That easing means they should get a growth boost, and so
yeah,
it's been positive for the one. I've had one last go at 701. I've kept it small because I am fighting a strong trend. And if seven breaks and looks like it's properly breaking, then I'll fold it and that one will go in the bin. But I think for a bounce here, you got to keep a look at China stocks. They gapped up. They obviously had a excuse me, had a big day yesterday on the announcement. They opened up again today, but then they closed at lows, session lows, but didn't close the gap. So I don't know if the air's already coming out the tyres of that expectation. The rate cut they did overnight was one of the ones they said they were going to do, so it wasn't a surprise or anything. But yeah, the 7 level is a big level. We did knock under it a little bit, but we'll see what happens from here. You know,
all right. I know it's a daily chart, but you know, it almost looks like a little bit more of an exaggerated but similar pattern that the yen had. See, 1, 2, and you know, and the 2 is all the way down here. Much weaker structure to come off of, but you know, maybe it's just the nature of how the yuan is. You know, it just has more beta.
Well, that's what had my head scratching. It kept going even while dollar yen, you know, found a bottom a week before the Fed or the week of the Fed. Other pairs, you know, found bottoms, and this one kept going. So, you know, when you have a strategy, it's not working. You got to think about what you're going to do if it doesn't work.
Okay. Aussie did break out. I don't know why I'm hesitating to add, but I didn't add on this breakout. I don't know if I feel like launching here, but if you did, you know where you're wrong. It should not close back under 68.20-ish. So, you know, about 70 pip risk. And if it is a breakout, there's a big move coming here. Yen looked like it was going to roll over yesterday with this reversal day. And I was thinking, oh, third drive. And I think this is what really, you know, set off dollar weakness, this reversal here. I really, you know, don't know what to do. I mean, you know, it looks like new highs here. If this is 4 and it's all a 4, we should go to where you're probably still long Ryan up around 114.
Yeah, it could well do. 115 is my massive level.
Okay. Yeah.
We do have, obviously, there's going to be a few bits and pieces in the way. 112.75 is the 61.8 fib of the 2021 move, I think. But it's a big decision here. I love these big levels. I love them. You know, these multi-year levels. You get a test. We've come back pretty quickly after that first test, so you know maybe it's going to break. But if it doesn't, then you know shorts know what they need to do. You can try a short here, and you only need a tight stop. You know, above 112, 15, 20, something like that. If it doesn't work, and if it holds, then you get a steeper pullback. The question is, what happens if it breaks? Does it just clear out the stops and then reverse? Does it clear out the stops, reverse, clear out the stops on the other side, then you know carry on up? I don't know. I've got a buy stop just above. I'm going to give it a go if it breaks.
Okay. Because I mean, just arithmetically, 110, 112, that's the range.
Yeah.
That would measure 114.
Perfect.
Okay, so Steve, go check out the chart of the day. Here we are at new lows. I have a hard time launching dollar shorts here. So, you know, even though we're at new lows, I think there's something big besides par. I know, check out Steve's chart of the day. He's calling this a breakdown out of a symmetrical triangle on the chart of the day. Steve's a great technician, so
and he's even here to talk about it.
Oh yeah, so maybe we could bring Steve on right here, and he could show what he posted on chart of the day. You want to do that, Steve?
You can go ahead and show it. You have the link.
There it is. Oh, your thing. Okay.
Yeah, I mean we've been waiting
for
we've been waiting for several days for this breakout. We've been consolidating for a month now. The DXY was the only thing that hadn't broken down because we had seen several markets break key levels against the dollar, be it the metals, be it some of the FX pairs, not all, like the pound, for example. Right. So, yeah, I mean, we had this missing and we currently seem to be getting that done. Now,
Is
is
there
there
anything
a,
tactically that you would do? Would you sell this breakdown right here if you were flat dollars? I mean, you're getting confirmation,
I
right?
think that things are very simple in the following sense. Risk assets are well bid and they're doing very well, and the path of least resistance is higher,
Right.
and the dollar's path of least resistance is lower until proven otherwise, right? I mean, we can always speculate when a trend is going to be over and when we're going to get a reversal. But my experience has taught me that instead of speculating when a trend might be over and the reversal might be coming, it's much more profitable following a trend until it doesn't exist anymore.
Mr. Confirmation. So that's why, what would you say your hit rate is, Steve? Because you do wait for confirmation.
I would say my hit rate is rather high, but my risk reward is not very high, because you can have one or the other. You know what I mean? If you're going for home runs, you can have a high risk reward ratio. You'll probably have 30-40%. If you're going for, if you're going for safer
just
bets,
to make money, not to get rich, just have a winning trade. You should never go into a trade saying, no, I'm going to get rich on this one.
Oh, yeah, absolutely.
Right? That's a bit wrong mindset.
Because usually this type of mindset is binary, right?
Yes, I mean, I've had a binary life.
It has the other side of the equation as well, which is either I'm going to be rich by that, or I'm going to be, yelling from the top of my rooftop.
Jumping off buildings like Superman without a cape.
I think, a much a much more conservative approach is the best idea for the vast majority of people. Okay,
I've seen that 99.5 number before. What is it that you're seeing there? What's that 99.40?
It's a previous low.
Okay. You mean going way back to the left?
Yeah, exactly.
Going back to like 2023.
Yeah,
that's what you're talking about.
And then we start being in multi-year lows. And as I've said a billion times before, right? When a chart shows you that something is moving to multi-year lows or multi-year highs, it is ill-advised to think that this is a signal of overbought or oversold market, and the thing you should be doing is trying to fade it. Usually, markets that hit multi-year highs or multi-year lows have a very good reason for doing so, and that reason is because they're either very strong or very weak.
Yep. Okay, I know a lot of people looking for 95. You come up with anything like that technically? Sometime next year,
we have
95.
a lot of interesting levels once we break 99.50.
Yeah.
But I'll give you my I'll give you my whole process of thinking here, right? We are coming out of a triangle. The small problem here with triangles is that triangles frequently can be reversal patterns, right? Yeah. If that's the case, though, we should find out rather soon. So the first thing I want to see is get that breakdown from 99.50, and then we can start talking about more aggressive downside targets.
Yeah, got it. All right, so Steve's not on here a lot, but he's on the private webinars every day. Okay, Morning Edge, giving you this stuff. And what's good about it is, what's great about it is they're not only trading ideas, you just hear Steve talk, and it's almost like you hold up a mirror to yourself and you remember the
we'll talk macro as well on occasion.
Yeah, but what I'm saying is that it's good to hear things that are proper to do to help you, recognize and see the things that you're not patient enough to wait for. So to trade like this really takes a lot of patience. You're not going to be in the market every day. You're waiting for a signal. Then you go with the signal. Once it's confirmed, you got it. If the signal's negated, you get out of the way. You take partial profits towards your objective and book it at target. And I know it sounds easy, but to do it it's easier to say than to cerebrally just do it in your head and make it your paradigm. So anyway, it still helps me to hear Steve. I guess I could have
It's
said
always
it.
nice being here.
Yeah. Okay, buddy. Thanks for nice looking work. And why don't we just go back to the charts here? Any news today, guys, that we have to be aware of?
There's not there. I mean, we're
There's
going to
not.
have new home sales and crude oil inventories, but not like nothing that's going to be a market mover. And this is probably going to be one of those days that really the markets explode. I'm going to say that just because if you look at the dollar, and I know Dale, you're like we were just having this conversation a little while ago in the ForexAnalytix chat room. Pullbacks in the euro have been very minor. They've been limited to a 38% retracement longer term. They are sitting right at 112. I mean, we are literally just 5 pips away from new trend highs, 5 or 10 pips. With economic data in the eurozone complete crap, and yet the pullbacks have been very shallow. And my opinion is we are probably going to just race higher at some point today. We're going to just start tripping stops. As Steve was pointing out, you look across the board, you got a bull flag pattern in the Aussie, the Kiwi, Sterling, dollar CAD, Norway's, probing really key support. There's a lot of dollar pairs that are really moving. And on a day like this, when there's no data, could be one of those days that things just start moving because you start triggering stops and then it's a domino effect. So even though there's no major data coming up for our show when we usually cover it, I still would just be very, very careful if you're trading the dollar today. So,
okay. I was showing where WTI looks like it ran its course for a while. I don't know if it's going to put in a higher low or lower low, but just got above this breakdown line just enough, shake out shorts, and that's a false breakout. And here we go. So are we going to correct this advance, or could we even puke to new lows?
yeah, it's actually the previous lows from back in June, early June. So I don't know if that's what your chart shows.
Yeah,
It is.
it's a
No,
tri.
maybe.
Yeah, I think it's
Anyway.
a triangle line.
But no,
there it
actually,
is.
yeah, you go back June.
Oh, you're off this line. So I
Yeah,
go back to even further. So it's anchored all the way back here at the
Yeah.
lows at 62. Then it came off this low. Then it held here. Then it broke here. Then it rallied back to here, and it's being rejected. So
Goes back even further than that, Dale.
does it? Wow.
You stick a line at 72, you can go back another 5-10 years, I think.
Oh, all right.
If you
So
want a long,
I
really
could,
long one.
yeah. So that's an important line. I mean, it's already proven it on the weekly. Let's see what Ryan's talking about. Okay, probably you're talking about here then.
No, 72, 73, right up where we knocked our head on it in this rally that we've just seen.
Oh, okay. Yeah, okay. Yeah, it's a swing area. Anyway, doesn't look, this whole rally that we've had off the lows, we're still lower on the month. So,
yeah.
I
still think it looks pretty weak and George says, it's the first time I've heard Blake mention crude oil inventories. I don't really pay attention. I don't trade crude. I'm
They were
actually
down. They were down. So why is crude? It should have given crude a pop.
right. I mean, it
It's a
just shows you
drawdown.
the weakness of it. I'll tell you, I'm not a good crude trader, and I never have. I've always said I'm more of a good analyst. When I look at it, I could call it pretty well, but every time I trade crude, it's like I'm on the wrong side for whatever reason. Um, but it is one of those things that is getting a lot of volatility right now, and I think there's a lot of reasons for it to stay heavy. Hey, Dale, I'm going to take over
Go
for
ahead.
just the last 10 minutes
Sure.
because we do have something happening in the next 20, next like 15, 16 hours with the Swiss National Bank. And I want to talk about this because I got some comments just, in our chat, just on this Face show chat. Mohammed was just saying, hey, thank you for the Euro Swiss. It's something that, I talked about on the week ahead video, and I was long. I actually just took mine off this morning. When we got to resistance, I jumped in the chat room and said, okay, I'm going to take mine off here. Because Ryan, there's no reason for this. There was no news that moved this, was there?
No, not really. No, it was a very strange move. Apart from the euro doing a bit of catch up in the crosses, but the fact that the dollar Swiss went and euro Swiss went tells you what was happening there. There is some suspicion that the SNB is doing a bit of a smoothing job ahead of the rate decision tomorrow, which people are thinking might be a 25. We're expecting a 25. Economist expectations for a 25, but I think the tradable market is looking for a 50. So it might be a bit disappointed if it only gets a 25. And if that's the case, we'd probably go all the way back down to 94, 94.20, if not
right,
more.
probably right back down here, I would think,
Yeah.
towards 94, not even 93.80.
Yeah.
That's important to understand because the first thing I did when I got up, when I get up, Dale, probably a lot like you, or it's pitch black out. I got my phone. I'm, heading down to my office. I'm trying to grab coffee. I'm looking at quotes, and I see that the Euro Swiss is up like 50 pips right into resistance, and I know exactly where resistance is, and I'm like, well, why is it up there? And was there some intervention commentary that came from Jordan or something? Nothing. And so since there was nothing, I just pulled it off because Ryan's right, because they might be smoothing it here, because if the Euro Swiss was here going into tomorrow, they only did 25. We could be trading down here by tomorrow.
They've
right?
built themselves a bit of a buffer, potentially.
Yes, exactly. This is Ryan saying they built a little bit of a buffer.
You made the right move. We always say in trading, you don't look a gift horse in the mouth. You wake up and see a 50, 60 pip profit right into a risk event. It's worth taking some money. I see Mohammed's on the same trade. I don't know if he's still holding on, but I think anyone who's been long from the bottom needs to at least take some profit off, lock it in case it does go the other way tomorrow. Obviously, if it goes your way, fine, you book more profits, but you don't want to be sitting in a winning position and the S&B comes up and sinks it all the way back down for you. So,
and here's the other thing, yes, and that very, very great recommendation, Ryan. But here's the other thing: if the Swiss National Bank does cut by 50, and they are dovish, and they talk about trying to thwart flows coming to them, because of what's happening in the Middle East and everything else, we could literally break above 95 and we could be trading at the 200 DMA in the next couple of days. So that's the flip side. Now it will happen in European hours. Unfortunately, I'll be fast asleep when they meet. So I'm not going to be able to, I'm not putting out orders just to take advantage of it, like on breakouts without me being there, because it's too much of a risk event. But for you guys that are going to be around for the Swiss National Bank overnight, I would be watching that really carefully if we take out today's highs, because I don't think we're going to take out today's highs today. I may be wrong, but I don't think that's going to happen. I don't even have any exposure now, so but it is something I think everybody should be looking at. If some of you guys are wondering, like, where's K-Man? He had to leave. He's gone for the next week, maybe a little bit longer for personal reasons. He'll be back. I know you probably missed him on the Flow show. And if you don't listen to the Flow Show. I just want to make sure that everybody is aware of that. So, you know, you're not asking. Ryan, let me ask you this. With the euro, and I'll show you guys the conversation that we're having here in the chat room, and I'm going to leave it for you guys here. I'll read it for you. I'm not going to post this on the ForexAnalytix platform, but I've been thinking pullbacks have been shallow, and if you look at early this month, that 38% retracement was 110. It feels like stops are going to get tripped today above the 112 level. Just a matter of time. Can it continue? I would say yes. Despite all the weak European data, the euro still forges higher. It's kind of like the stock market climbing higher on the wall of worry. There may be some much bigger forces out there selling US dollars across the board. I'm sharing that with you guys as our listeners to the free F.A.C.E show. Those are the types of conversations we are having inside of the ForexAnalytix community. But I want to open this up to Ryan. You know, Ryan, look at the euro. I mean, this bull flag pattern, just so you guys can see it, it pushes all the way up towards 114 and change. You know, that 114 and change is just a longer term trend line that goes all here. Let's go to a weekly chart. It goes all the way back to May of 2014. The one that we're above right now currently goes all the way back to the highs back when the euro was trading at 160. So you can see
this is a big deal.
Yeah, we're taking out all sorts of big levels. And so if you're out there trying to fade the euro, you have to understand what you're up against. And you can see the euro's just I'll remove the flag extension, but you can see how we're just pullbacks are just being bought and we're not giving it up. And Ryan, what do you think here with the euro? I mean, what do you do with it? Oh, we might have lost Ryan.
Ryan would say sit with it.
I'm here, sorry.
Oh,
yeah.
No
if you scroll down in the chat room just under your post, you'll see what's going to happen. There's only 4 things that can happen. Okay, so
4. I thought there's 2. It goes up or down. Just kidding.
No, there's 4 things that can happen. Okay. There you go. So it holds and then it heads lower. It fake breaks out, then heads lower. It fake breaks, stops all the buyers on the break players out on the top, then heads back through and stops all them out down below. Then it goes up and it has a real move through, and everyone's waving it goodbye, or it breaks and keeps going. And as I said today, I'm long, so I took a bit off at 11.95 with me 110
longs.
Makes
sense.
You got to respect the level.
Yeah.
I'm not keen to go short. But if it continues to hold, then I might do a little separate short just to play off the level. Otherwise, I'm sitting with my buy stop. And if it goes, then we sit back and see where it wants to go to. As I said, we've got that big fib, 61.8 fib, the 2021 move at 12.75, and then over there it's off to the races.
Yeah, and you know, Dale knows this too. I mean, when things go up, and you think they shouldn't be going up, or like, you know, it's like when stocks go up on bad news, you have to be respectful of the flows that are coming your way, right? And same thing when like the euro is going up and it shouldn't be going up. You could I just read analysis piece from a guy that has he has a newsletter 2 days ago. He's like, interest rate pricing suggests that the euro should be trading at 110.50. Yeah, but it's not. And it continues to go higher, when you look at interest rate differentials. So what's it tell you about the dollar right now? It tells you it's weak. You got the Aussie, bull flag pattern. You got the Kiwi, bull flag pattern. You got the sterling. I mean, this damn thing's unstoppable. Bull flag pattern points to 136, by the way. Dollar Canadian. I mean, we broke a major multi-year trend line yesterday, and the bear flag pattern's going. I mean, when you have all this dollar weakness coming through the market, dollar yen's its own, dollar yen is the dollar yen. I don't ever factor that into the rest of my dollar trading. But when you have this happening across so many majors, I think you got to be very, very respectful of what you're seeing. Anyway, Dale, I know you're going to bring on Steve. Is that it? Ask Slim.
Steve Miller is here with us from Ask Slim.
Yeah. So before we go into Steve's interview, I want to ask you, what are you looking at today? I mean, I know you don't want to chase the dollar lower here, but anything else you're thinking?
No, I think we've embarked on a major bear market. I was bearish dollar 106, 104. I made a tactical error looking for 102, so I didn't get short or add on to Aussie on its breakout. But, I'm a dollar bear. And I always felt that the commodity currencies probably had the best potential. And, I was talking,
the euro's above 112. It's now popping
yeah.
stops. We knew it was going to happen today. Here it is.
Yeah. So,
yeah, there we go. 112.06, 112.07. Let's see what we does now.
I think Steve's targets are very realistic.
People must be
they're not
reading
aggressive.
the chart of the day by Steve.
Yeah, they're very realistic. So, 115 I see in the euro. So, just stay short the dollar. I think there's something at 99.5, a lot of people. Plus, you take out a big round number. This is wave 5 of 1, okay? So this is, it could come in a hurry and complete. So with the stock market. So the dollar, so the dollar heads lower, stocks head higher, metals haven't peaked, all of this, all one market, and the dollar's an important part of it. Dollar's weak, long the world. Dollar's strong, raise cash. So that dollar's weak, so be long everything.
All right. Well, as you say, Dale, if you get the dollar right, you probably can get everything else right, right? Right?
Yeah, it's important. It's a fulcrum of the wheel.
Yep. So, So, hey, have a great interview with Steve Miller.
Yeah, he's great. Yeah, Steve's here. And he has been promoted, so we're good to go. And Ryan, thank you for all your great insights today and every day.
Oh, shoot. Gregor was here too. He didn't get to say anything. Dang it. I didn't see him.
Yeah. Okay. Well, see you tomorrow, Gregor. And Steve is here. So welcome back, Slim.
Be back.
How are you?
Good.
Yeah.
Good, thank you.
Welcome back. How are you?
Been tuning in. Been great. Been tuning in, listening to all your banter. So interesting.
Okay.
Love it.
I find your work really top drawer.
Well,
so
appreciate that.
I haven't caught any YouTube videos in a while, but I'm very interested in what you're thinking going into October in multiple markets. Where do you want to start, Steve?
Why don't we start with where you guys left off, just so that we, with the dollar, because that seems to be where you're really focused right now. You should see my dollar charts right now. Make sure that got them.
Got them.
Good. Okay. So again, for a lot of people that are brand new to my work, my team and I are cycle analysts, and we essentially look at market rhythms, the money flows in the market, and look for repeating money coming in, money coming out. And we learn a lot from multiple time frames, looking at intraday charts, but specifically focused on daily, weekly, and some monthly charts. To get an understanding of how money flows. The longer term holders are the ones that kind of really hold into positions. Those are monthly charts, and we get into intermediate and then daily, the daily being the much shorter term holders. So we get a lot of messages out of that. These half circles on the bottom that you see right in here, those are called cycle brackets. And those are just a drawing tool, and they help us understand the rhythms in the market, those money flows. Let's get to the dollar analysis in here, because you guys were talking bearish on the dollar and looking at 99.50 as some important number. And yes, I can corroborate that for you, because, everybody's looking at that number way back over here at that low in July of 23. At that number there, it broke this cycle bottom right over there. And now, again, we're looking at the cycle rhythms and the timing. And if you look at these cycles in here, you could see it just blows you away with how perfect the timing is in here. Rising phases, peaking at resistance, declining phases. This was a very beautiful, positive translation in this chart right here. Let me blow that up. But then when it rallied, it failed at that high and came down and broke that low. Once it broke that low, it told me it had all of this time to fall. And we were very bearish. And our momentum indicator, which is our reversal scout, turned over right there. And you can see it's been negative that whole way on the downside. Now, what this points to is that if it were to make its trough in here in the cycle in what is the average period, the distance from one trough to the next, that takes you out into November. So essentially, we're looking for the potential for decline out into November with that 99.50 number that everybody's looking at, but there's a major 61.8% here at 98.86, which to me is also a reasonable downside target. So that says to me that during this period in here, any rallies are likely to fail. If I move over to the daily chart, we can look at those rhythms in there, and you could see beautiful harmonics that are in there. And right now, either this minor third or this minor half is going to give us an area to bounce from. And I heard you talking about, if the dollar is down, you buy everything else. If the dollar's up, you sell everything else. And that kind of makes sense. That correlation is not perfect, but it does make sense. Look at here at our what's called the slim ribbon PO, where it gives you all those negative resumption signals and is red. Perfect in there, really got great information from that, and it is still red. So in here, we're looking for somewhat of a feeble bounce, but probably from mid-October out into maybe even the election time is when I see a potential bounce in here in the dollar, but then it is likely to continue to the downside after that. If you look at the cycle dates in here, on the daily chart, it says that that rhythm, in other words, the selling phase in that would end around the mid-November period. And I go
the
back,
election, Steve. So
yep, and I go back here, and this is mid-November also on the weekly chart. So that side by side says we get a rally sometime into towards the election, but not a major rally because these formations won't allow for that. And then another move to the downside for the dollar into mid-November, late November period. One more thing I really want to show you that I think is important because you guys focus on the dollar all of the time. I'm going to blow this chart up. This is a monthly chart in the dollar. And this is, I usually don't show this on these, but this is so spectacular. I really want you to see this. Over here is where it looks like on the monthly chart, here's November, December, where there's a trough. And then coming out into 2025, a period of rebound for the dollar. But this is a very negative overall pattern. And that calls for a decline in the dollar of great significance all the way out into late 2026. You can see each of these yellow zones is where there are significant downside moves. Absolutely perfect. And there's one of those coming out here in 2025, 2026. And that tells you that this whole period now of de-dollarization, which a lot of people say, that's baloney. The BRICS can't organize. There's no way that they can do that. But they are doing it. And de-dollarization, I think, is real. And this chart shows that to you. So we're in for a long, long period.
Steve, the Trump administration already is talking the dollar down if they get in, because they want exports to occur. So I know you're technical, but could that come into play with all the tariffs and everything?
Well, it certainly could be, but you're making an assumption on a Trump win that is built into these charts. And I'm not going to get political here. I don't like either candidate. So in this case, maybe it's telling you that. But remember, there's a whole period in here where the dollar could rally of some significance. It could get all the way up to 103-ish or more. And there's a period of some kind of potential rally in there for the dollar. That also would be a period where probably the gold market starts to correct, though I've been very bullish on gold, and I remain very bullish on gold over the very long term.
Okay. All right. Great look. Thank you for fine-tuning some dates. So dollar down until early October, and then a recovery.
Then a recovery, correct. And it might make 99.5 before that. It might not. It
Yeah.
doesn't really have to. I mean, it's already in a negative trend and could, get close to that, just under 100, test
Yeah.
par,
Take out big round numbers or emotional levels.
Yep.
Yeah.
Right.
Okay. So let's take a look at S&P, Steve, because everyone's trying to pick a number, and I say, why pick a number? We'll see it when when it happens.
Well,
But the rate,
let's start out by me saying that I was a bull for this year, but no way did I expect the market to make it up over 5,700. Actually, at the beginning of the year, I said it was, my outside was around 5,100. So my timing has been great, but the magnitude of the advance I've missed. So but our cycle patterns and what we look at are really what help us with the timing. So I'm going to blow up this weekly chart for you to see in here. And you can see that what we're looking at, and look at these magnificent rhythms in here. I'll take it from the bear market low right there through this whole bull market. And you can see those cyclical rhythms in there. They're beautiful. And each one of those yellow zones is where you get into the corrective, we call that the periods of risk. And these vertical lines show you where the actual low was, and these cycles show you on the bottom, these cycle brackets show you where the average lengths would be. Right now, we're moving up into what I think is a significant period of risk where there can be a very sharp decline in the market. Now, it could stop in these minor supports. Maybe we only get down to 54 and a quarter. 300 points is only a 6% decline. That would be, this one over here was 5.9%. So, I mean, that could happen 6%. It could happen where it's 12% and get all the way down to the monthly 23, which is under 5,200. So the next 6 weeks or so are a period of very high risk. We're in that window, but there's no sign of a peak yet. You can see in here where our reversal scout turned up, it's bullish momentum here on the weekly chart. If I switch over to the daily chart, this has on there what we call our slim cloud that we project using these channels in here. And you can see it's moving way up in the top channel there with an upside potential before it peaks here at 58.30, right in that range. So it's in this rising phase. This is the slim ribbon, which is a free indicator that shows you momentum. And the slim ribbon PO is a proprietary indicator, and that's green down over here. So this is all positive looking at the daily. It's looking for a corrective period out over here into somewhere around the 1st to 2nd week of October. And then one more move up, as you can see, into October before that period of risk takes over. So depending on the depth of any kind of a pullback we get in here and the rise in here will help us understand the condition. But I have a lot of confidence in the timing, because you could see the timing in these cyclical patterns has been absolutely outstanding. So we're looking for the market to begin to stall over here, get a correction into sometime early October, another rally over here into early to mid-October, and then from mid-October to mid-November, a sizable decline. And that aligns with what we just talked about in the dollar, if you remember, where we think there's going to be a dollar rebound during that period. And that's also going to align with a gold corrective phase at that time also. So the correlations are holding up really well based on all of the different markets that we look at.
So we're close to some corrective moves on the dollar to the upside and the market and gold to the downside.
That's correct.
Steve, is it always going to be one market where everything goes up together and everything goes down together? I can remember days when there was differentiation between asset classes. Is it going to continue to be basically all one market? The only difference is magnitude of the moves, but pretty much they're all going up and down together.
Yeah, and I think that's the case. I mean, the correlations that I look at have held up for a very long period of time. And you have to really wonder if it's not government invasiveness that kind of makes it all one market. Because when you look at the amount of stimulus that's been put in to our economy or to world economies through massive deficit spending and the amount of debt that's been accumulated, that really makes things really very well connected regarding flows of money. So we get into liquidation stages, which we've seen for quite a while, affects all markets. And that's you know, if the stock market's falling and people who are at record levels of margin debt have to then begin to liquidate, well, they liquidate everything. They don't really have a choice. They've got to raise money.
I saw a chart that margin debt is nowhere as high as it was before 2023.
Well, that's correct. Margin debt is nowhere as high as it is. However, net reserves in brokerage accounts is at a record low. So those are kind of two different numbers that I look at. So
interesting.
There's not a lot of money left to invest in brokerage accounts. They're really at record low cash positions. So, and they're chasing this market. Let's look at gold real quick, because I think it's so important, because it's in line with what we're talking about. You know, I've been very, very bullish in gold, and I made a wild call that in one of the bear markets coming up for the stock market, the price of gold and the price of the S&P 500 would cross, probably well into the 3,000s. So I'm very bullish in the gold market. And it's now gotten into a period of very heavy resistance, as you can see right over here. Monthly fib extension here, a weekly fib extension here, a daily fib extension here. Those are all lining up to this area between, my target was 2666, so it's gotten through there up to this level right over here at about 2710. This is where I think it's going to stall. And that period of stock market liquidation, you can see, really aligns well with this, which takes you out into mid-November. This is where I think it's a load the boat on gold right over there, assuming that this analysis plays out correctly. Then I think after that, we get to move up here, those fib extensions and those targets based on this big dominant cycle coming across. So this is the minor cycle, and look how silver comes down and corrects with it also very nicely. And then these rising phases right over here could very well get you up into 2900s right there in the gold market, which takes you out into early 2025. So that's a very bullish outlook. And when you get this type of a cycle, we call this a right-hand translation, where the peak comes on the right side. It only leaves a little time for correction. You can see this one over here actually was triangular because the upside pressures were so strong. So it didn't allow for us. It only was a sideways correction. You could get something like that in here, but I really think a pullback to just above 2,500 or to somewhere around 2,500 right here is where that's going to give the support. And that being a major buying opportunity. I've been very bullish on the gold miners, also silver miners, especially the juniors. I think leverage and the earnings is fantastic for them. So in this pullback, it's kind of, I think, load the boat. If it does come that way. If I look at the daily chart right over here, you can see that this is a minor pullback we're looking for in the next week, and then rising to that period out over here for that peak before you get into this corrective period out over here in the gold market. So nice timing alignments in there, and what really looks to me like a buying opportunity coming up in an exceptionally strong market.
Okay. And after this correction in November, do you think that we're putting in all-time highs in the S&Ps, or and this is just another, July type of scenario, and then we go again?
I actually, here, I'm going to put the monthly up again. You're getting a treat to some of the charts that are really for my members. This is the monthly chart in the S&P 500. And you can see that based on the minor corrective period in here, that this period that we're in right now, we're expecting that correction is only likely to be brief. And the next rally up over here is likely to get you up into that area somewhere between the peak that we make in here around 5,800, if that happens, to maybe as high as the mid to high 5,800s, or this number right over here.
6,000.
59.60 is where that comes in. I really have doubts about it being able to get there. The problem is that we are right now at about a 200% market cap to GDP. We're at historic levels in valuation. Only the amount of stimulus that we've had around in the world can make this happen. And I think this is a massive bubble. And I've talked about the fact that a secular bear market was forming. We're getting into that kind of a peak. And I think we're in for a massive, many, many years of corrective periods that look a lot like the 1970s, where the overvaluation
We're in a range
corrects.
forever.
Yeah, it was basically a 40-something% range that we saw, and it lasted from really 1968 out to 1982.
That's right. August 82 was the
That's
low.
correct. I remember that. I was trading it, and I know you were too. If you go back and look at the big patterns, this looks like 68, the bear market, and out to 1970, the rally up into 72, and then the bear market that comes out down to 75. This almost
Interesting
perfectly
analog.
matches that. So it's that's where I think we're going. That we're in an everything bubble right now, and the markets could only be at this price level because of the massive stimulation we've seen that gives you something as ridiculous as NFTs and 20,000 different altcoins and all that. There's so many ways.
Don't you own? Well, what about a blue chip stock like Children's Play or
Children's Place?
Place. They're bankrupt.
I know.
Right?
I've
It
no
just
idea.
tripled. It just tripled.
Yeah.
Anyway.
I no idea. No idea. And
Okay.
I can tell you that one of my money managers has that long for me in a investment account. So go figure.
Anyway, yeah. Don't look at your statements.
Yeah.
Steve, I'm a fan. And so you've been coming here for a while. I appreciate it. And I think you've developed fans here. But for new people that are here that want to follow your work and get involved with you, besides X at Ask Slim, where should they go?
Well, they should go to my website. Let's just pull that up right over here. This, by the way, is our ranking system, which is all of our algorithms built into that. And if I just go to AskSlim.com, this should come up in a second. And there's our site, AskSlim.com. And you can get all the information. Right now, we're running a special on level 3 where you get 35% off. It's just a massive amount of content, all of our algorithms in our applications, our Discord page, lots of support from our team. We have 4 incredible psychoanalysts that are on our team, and you'll be able to get a great idea. You get our cycle low timing tracker, which is a great app that we do. And these are our memberships that you can see right here that we encourage you to join, all the way from being a day trader to being able to look at investment type time frames if you're a longer term holder. Our charts hubs have just fantastic ways to see all of the charts that I've shown you that are in there and placed in there for you to see. Level 4 members get our live charts, and we have great testimonials on there. So this is
Let's see that picture of you working there. Okay,
that picture right there is me in 1974 on the top. Yeah. That's me with my hands up screaming in the original CBOE floor right over here. Yeah. And so that's me 50 years ago. I became a member in May of 1974. This is me in the 80s doing my cycle charts on paper because, of course, we didn't have computer yet. So you could see the look after I'm spending hours putting the lines onto the paper charts right over there.
Yeah,
so
what I think that those charts were CRB charts.
Those charts, I had CRB in there, but these charts, I had 32
Commodity
different symbols that I did by hand.
Commodity perspective. Did you use that one too?
This big one over here. Yes. Yeah. That's their 100-year chart.
Oh my gosh. All right. So there you go. That's a classic picture. I don't know what an NFT is, but that'd be a good one.
An NFT?
Yeah. Make that into an NFT, like Melania. I mean, before the top.
I could probably do that, yes, but I don't
know. Anyway, before the top in the market, and people are still throwing money around. So 25 is the year of reckoning, Steve, huh?
25, I think it makes the peak. And then I think that there's a very major setback in the markets, all the markets, and a big liquidation phase.
Yeah.
So,
Okay.
and that, that very well may come by either of these presidential policies, because either of them can bring a disaster in this economy.
Yeah.
So,
I heard, here's the metaphor I heard. When you're flying into a mountain, does it matter if you hit the left or the right side?
yes, that
Steve?
is a sad but true metaphor.
Thank you, my brother.
Yep. Glad to be here.
My trading warrior brother, Steve Miller.
All
Follow
right.
the guy. Great
Thanks a
work,
lot.
Steve.
All right. Thank you. We'll see
Thank
you
you,
again.
buddy.
Okay. Bye-bye.
All right. So that's a wrap, everyone. You could join the team on the Morning Edge in 20 minutes. And thanks for hanging out. And don't just count your pips, count your blessings. Hi, Scott. Do you have my phone number? I want to talk to you. All right. Adam, you're welcome. I'll see you guys. You're welcome, Hugo. Okay. And that's a wrap, everyone. Good hunting. I'll see you tomorrow. What's today? Wednesday. See you tomorrow. Good luck. Adios.